welcome back to my YouTube channel. Make sure you comment, like, and subscribe to it. So today we're gonna go over entries and targets and kind of talk about the difference from the higher time frames and the lower time frames. There's so many people that comment on my social media and they'll be like, I don't understand, you swing or you day trade or you hold trades for a specific amount of time, but you're jumping down on the lower time frame. That is how you get good entries, is on the lower time frame. Just because you're jumping down on the lower time frame, that doesn't mean you're scalping. It means that you're getting more price action on the price you want to enter on. So I'll show you what this looks like, okay? So we're just going to pick random spots in the market. We can start with current price, which is right here. So if we take the rectangle tool to identify our zone, so this is manipulation. If we look left, this ended up testing into this wick. If we look left again, this ended up, so this is a really strong reversal area. So we want to identify the two prices. And then honestly, you could have took it here too if you were prepared, but I'm going to show you how you jump up or jump down and then jump up again. So again, we're taking the trades off the left. So whatever happens to the left repeats to the right. So basically what happens here, we have our 4-hour zone, and then we can mark up the above targets. So basically this is our target 1 area based off this reaction. If we look left, we can also see that this broken test. If we look left more, this tested in as well. So that's also a strong level. We attach our prices and then we move to the next. So this was a reaction right here. We go candle to the wick. The zone cannot exceed 20 pips because you're trying to have an accurate entry and stop loss. So don't forget that. So if we look left, we had 1, 2 tests in, 2 reactions. And here we ended up breaking and testing as well. So this is a strong potential target. Obviously, you guys can see like where it is now, but I'm just showing you how this works. Whether or not you're replaying the market or back testing, you got to know what you're looking for. So this is also called forward testing. So it's good to back test and forward test. So this is a strong level as well. Okay. And then you can draw as many as you want. You don't have to go crazy. So if price is at 156, I know it's at 160 right now, but if price is at 156, you can just have these 3 major zones in between. And then as it breaks, you can add in more. You don't have to have all these zones over your chart. Like, you don't have to go crazy. And then the 1 hour are our minor zones in between. So between each H4 zone, it's about 90-ish pips on that one. This is 72, and so on and so on. So if they're really big, like 90 pips, what you can do is you can add in an extra zone. So where it reacted in between here, you can basically add this in. And then you can add in more prices. Or what you can do instead of doing the zone, so you could do a zone with a different color, or you can even write in the text, you could write that this is a 1-hour structure. Or what you can do is just add in the prices with the horizontal ray. So go from the candlestick body, and then you want to have 2 prices in there. Okay? So basically, if you're buying here at the major structure, you want to make sure that these 2 prices are breaking. You can do that with like throughout the structure, like even in here where it reacted. They're obviously going to break, but mentally you can see the price. And when you're in that actual live trade, you're not going to freak out thinking it's going to come back down your entry or close your entry. If the price is breaking and you can see it fully break and continue up, then you can stay in that trade. So the more prices you have in between while you're live trading, the better, obviously. Okay, so price arrives down during New York. And so this is the first reaction into the major reversal, okay? So then this is the middle of the day. We wouldn't enter here in the middle of the day because there's low volume, low liquidity. So there's no point. And also the market reopens at whatever time. Everyone has a different time zone, but the market reopens at some people 3, 4, or even later, like 10 or 11, just depends on where you are. So you don't want to get in and then get charged for swap and have a shitty entry, because what happens is if you enter too early or at a random time, the market will manipulate. They'll take out stops and then they'll bring it up because they're trying to get sellers in here and they're trying to absorb as many orders as possible. And then also they're trying to take out the stops of buys as well. So there's a lot going on. And so that's why it's important to not enter too early or too late, and not enter at random times. We're never entering in the afternoon mountain time. There's no point. You have to enter at specific times. That's another rule, guys. Each session, obviously we trade Tokyo, London, and New York, but each session, about 1 to 2 hour range is the only time we're trading. So for example, London for me works very well from, I'd say it just depends on when structure arrives at what time, but majority of the time it's between 1 to 3 a.m. is when I need to be entering. If I enter too late, then I end up, it ends up manipulating and I get stopped out or whatever the case is. So you have to enter at specific times all the time. Every time you're taking a setup, it can't be off a random time. So we wouldn't enter this anyway. You never enter on a first reaction because it always manipulates after. So basically it continued down to here. So why did it manipulate down here? So if we draw a zone and look left, we have major reactions from here, massive moves, okay? So it ended up reacting to the 6 and then ended up continuing up. Okay, so that's why it came down further, is because this major bottom section had to get filled. So they filled it, tested in, and then reversed back up to that next level. So how you get this trade, so this ended up continuing up. Now let's say, again, we're not entering at this time, so we would miss this, okay? We would probably enter like the next day. So you have to kind of count the reactions. So this is 1, 2, 3 reactions. Usually the second or third reaction, usually the money releases after that. So you have to be careful of when you're entering. So this is in the middle of the day, and then this basically turns into midnight. Okay. So if you didn't, you could enter in the middle of the day once it closes above this structure, but realistically what's going to happen is it's going to come back down. It always does. But let's just say you wanted to enter here because you saw that it closed above 260 and 357. These are the two prices based off the left. So how you would get this entry is you would go down to a lower time frame. I'll show you. So you go down to the 10-minute time frame. And you want to make sure that those two prices break above. Okay, so see how this broke above and now it's coming to test in? So basically what you want to do is, if you want to get this right above, once it closes above 357, you could technically get it at 467, like in the middle here. So you can count up, realistically, you can count up 10 pips from 57. And if you do want to get it right after it closes above these two zones, you can even jump down further. So if we jump down on the 5 or the 1, you can basically see more price action. So this 1 minute closed above, this is the clear that we can enter structure right after it closes above that 357. Or what you can do is actually enter a buy stop, or set a buy stop. That's something else you can do. But limit orders and stuff like that, you really need to practice with, because you can get really screwed on those. So once this price has closed, you can take the entry. You can manually enter as it's closing. You can manually enter, but the point is you want to get it right by that zone before it ends up going up. So your stop loss in this case could be really small. It could be like 12 pips. It could be even like less, but I try to do 15 to 30 pips just depending on what time frame I'm entering on. Because the shitty part is when you get stopped out and then it goes your way, it sucks. And so you want to try to avoid that. So you want to try to give it some room. So once you take that entry on whatever time frame, the lower that you go, the more price action that you see closing above the price you want to enter at. So once you get that, you go back up on the 1 hour and you follow through. If you stay on the lower time frames, this is when you're going to get a shitty risk to reward. You're going to get a 1-to-1 and 1-to-2 because you're staying on the lower time frames. You have to go higher. So as you can see, we wouldn't have been able to get this entry on a higher time frame because it's broke, like there's too much info in a 1 hour candle. So we're breaking it down to be able to get in after it closes above that 357. Okay, so then in regards to our target basically would be 1567, like this area where the minor structure is. And then if it breaks above that, then basically I would have one line in here at the 1569 essentially. So I would just have these prices in to just make sure they break because they have reacted. And so that way you'll feel more comfortable. And then as long as these three prices break, you can extend it to the major target, which is the 4 hour. So let's just see. Okay. So here you can see that it ends up tapping in and then it ends up reversing and then closes. So when it's like this, it's because of the fact that a new session is about to come in. So London session is about to come in soon. Okay. So at the beginning of Tokyo, it brought it up. It ranged for a bit, no volume, and then basically London came in and money released. So it ended up actually breaking and testing this 932, staying above the 743 and the 7. You have to be careful in regards to taking a short here because of the fact that this is minor structure. We're entering off major structure only, or like if you want to add in another position, you could here, but I honestly wouldn't because of the fact that this has only reacted once. So of course it's going to come back down. But anyway, these three prices broke above. So our next target is 157,185, and then our next target would be that 289. So it obviously manipulated a little bit, then ended up closing and testing. This right here is showing you that this is ready to correct because it can't break above this major zone. So in this regard, you would take profit. So that would have been a 1-to-5, 90 pips, risking 17. Okay. So now I get this question all the time. Can I sell if I see the setup? If you are mentally prepared for it and you can like mentally control your emotions, yes, you can buy and sell for sure. Okay, but here's the thing. You don't want to be buying and selling at minor structure. You want to just do it off the major structure. And as well as you don't want to get caught up in buying and selling all over the place and then being confused of where the trend is going. So we know from these two levels that it's bullish. So if these prices respect, it's going to continue bullish, right? So if this 157 breaks, I mean, we know where it's going. It's going all the way back down to this structure, okay? So it comes down again. It retests this price. So the same price you can enter on. The same price that we entered here, you can enter here. Again, looking at a lower time frame, we have manipulation, we have one test in, we have two tests in. So anywhere around this price above the 157, you can take an entry. Here's where it gets tricky. So it comes up to that minor structure, comes up to that minor structure and then ends up coming back down because it's coming in for another test. Okay, so the reason for this is because this is ending up late New York. So this is lunchtime. Okay, this is 12 o'clock. So you're entering at 7 and it ends at 12 o'clock and then it comes back down. This is normal. It's just it's basically accumulating orders, and they're ready to release the buy orders eventually. So what ends up happening is different time sessions are coming in. So for example, when New York is finished, Tokyo comes in. They're not going to add buy orders at 156.7. They're going to bring it down to the best price possible. So 260 and 350, for example. So it comes back down again, but each time, it doesn't matter. Each time we can take an entry at the 357, because it doesn't, like, your stop loss, like literally here, it came down and wicked a little bit. That's 8 pips. If you had it, like I said, at 15, 20, and so on, you would be fine. But basically, our key entry would be that 357 and right above. So anyways, it took a little bit of time. So this started on Friday. Oh, that's why. Friday ended and then Sunday came in. And then basically this was Monday and Tuesday. So that's why Friday was ending. That's why it took a bit. So Monday it tested in once. Again, Monday later on it tested in. And then Tuesday during London, it ended up they finally released the buy orders. So your entry could stick with the 156.357, but it kind of tricks you because you're thinking, oh, okay, well, it's not breaking above these levels, it's going to continue down. Make sure you look left, because we have lots of price action showing us that it's bullish from that price point. And another thing that you can look at is, okay, well, how long has EJ been dropping for? Like, let's start at the top. It's been dropping for 928 pips since December 30th of last year. So it's ready to correct, and it's at a daily structure. So you have to take the trend off the higher time frame in this case, because sometimes, like, the 1 hour can confuse you, thinking that, oh, okay, well, it's going to test back in here. But no, this is a daily level, and it's showing reversal. This already filled that price on the left-hand side. Now it's ready to go. Another thing that you can do is use the yen index. So you can use the yen index in regards to the direction of the yen. So if you know that the yen is, if it's bullish, then obviously EJ is going to sell off, and vice versa. Same with GJ. If the yen is bullish, GJ is going to sell, EJ is going to sell. If the yen is bearish, then it's the opposite. So that's another thing that you guys can focus on, is the yen index. That's kind of how I get direction, and then also the trend. Anyways, so you can enter on these on the same price, and then basically you're just following through for your target. So wherever you enter, again, the first reaction, it comes down, it comes back again for a second or third, and then that third releases. Second or third just depends on what time and how many times it hits the zone. So same targets apply. These prices have to break, this has to break, so on and so on. So then basically it hits our 766. Okay, cool. So we need to continue. So this is New York. So if New York doesn't break past these prices, it's going to correct. Okay, so it corrects a little bit, but it can't break below that 635, and then it continues up. It tests in, it retests that top price at 932 and continues to our next zone. So you just extend your target. Now it's up to you. It's up to you how many, how much you want to get. The longer you hold, the better, because less is more, honestly. So this would have been a 1 to 5, risking like whatever you wanted to risk, 15 pips, 20 pips, whatever, and then 194. So these two prices have to break in order for it to continue up. So it ends up continuing up. What's the date today? The 12th? Oh, this is today. Okay. So it ends up continuing up. So how we get this entry, let's actually talk about this whole move, okay? Let's say you miss the 357 and you just want to make sure it actually continues up. Let's just say you wanted to wait till the next zone. Basically, what you look for is this 1 hour closed above this price, and so basically you're waiting for a retest. So how you do this, once that 1 hour closes, jump down to like a 10-minute time frame, and then basically get it on the retest. So you're focusing on 932. You're making sure this 932 holds above. You could literally get in here if you wanted to above the 158 even. Or if you had enough confidence that this is going to carry up and the yen was dropping, obviously it is dropping, then you could buy at that exact number 932. You can count up 5 to 10 pips. It's totally up to you, but you're getting it near this zone right before it actually releases. So same with here. You can buy here once it breaks and tests to get that price action. You go on the 10-minute. So as you can see, it ends up breaking and testing that 318. So you can take a literal buy here. You can even drop down further. See the 5-minute, see the 1-minute. You're just literally getting more price action on that number and price you want to enter on. So you could literally enter anywhere in here. Like once this breaks and tests this little guy, then you can enter, or even at the top price, you could enter right here. Point being, you're not staying on the lower time frame, you're going back up to the 1 hour. Now, obviously, the later that you enter, it's more than likely going to correct, depending on what's on the left-hand side. So for example, we're coming up to some structures. So this is one structure. Okay, so these two prices have to break in order for it to continue up. Okay, so it continues up. I honestly don't know how far it goes. I can't even remember. Okay, so this would be the next target. This would be the next target. And then again, if you're confused, just base it off the left-hand side. Put in the prices. This way you know exactly what price you're entering and exiting off of. You're not focusing on a stupid candle or a trend line or any of that BS. Like, you're literally focusing on price. No one talks about it because no one knows about it. Trust. Okay, so it ends up breaking this structure. It comes down to the 159 even. The reason for that is because we have a minor structure in between. So it breaks, tests. Here's another buy entry you can get. The only thing is, like I said, the later that you buy, sometimes it does correct. In this case, it didn't, but basically if you bought here, you would have to make sure this structure breaks. It obviously still is like, it's still a decent risk reward, but it ended up breaking and testing that structure, and then it literally went all the way up to major structure. So now what's happening is it's correcting down from basically close to the 161. So basically in here, it tested in because it rejected here, and now it's rejecting. So this is where we are right now. So basically what needs to happen is these two prices, the 200 and that 278, have to stay above, or else what's going to happen is it's going to come down, correct, and go to the 160. If the 160 breaks below, then it'll drop back down to the 8 and then the 577 and so on and so on. So if we look at the daily structure, we can obviously see that, I mean, it's kind of a mess, but we need to fully break above this structure in order to fully come up and pull through, which means the yen would have to completely drop. The yen is overall weak, but this fully needs to come up, break all of these levels in order for it to continue. But again, to get that confirmation, the yen needs to be dropping. So it's going to correct now because of the fact that it's been going up for so long. So it's going to correct. But these are the two prices. So that's what I'm saying. You jump down on a lower time frame at the specific price you want to enter on, and then you go right back up to the 1 hour. If you stay on the 1 minute or the 5 minute or 10 minute, you're going to get so confused, and you're going to think that, example, if you bought here on the lower time frame and your target on the 1 hour was up here, but it was rejecting and you're freaking out because you're looking at candlesticks, you're going to get out and then you're going to lose all of this trade, right? But if you enter here and then go back up on the 1 hour and identify the targets to the left, I mean, it's so clear. But on the 10 minute, there's 10 minute candles each candle, so it's a lot messier. But that's kind of how you can day trade and hold for longer periods of time. It depends on how much profit you want. Some people are comfortable with taking 100 pips and then they get in a new trade. But if it's really trending like it is now, I mean, stay in it as long as you can. That is how you, like, you could literally do this 4 times a month and you'd be done. So less is more, I promise you. But yeah, I hope this made sense. Really back test the entries and really practice them, like going down from the 1 hour to a lower time frame, getting it at a specific price, and practice your entries and exits, and eventually you'll get it. Yeah, let me know if you guys have any comments. You can comment below.